Westfield, take it on over.
Okay, Westfield kind of was the darling a little bit for the beginning of the year. We're starting to hit the brakes on Westfield a little
We're
bit.
on Westfield, not Fishers. That's a joke if you caught the Fishers Market Report. All right, sorry.
No, Westfield, we talked a lot about it again in the economic data. There is a lot of exciting stuff going on there. And that does play to the long-term value of Fishers. I am still bullish on the long-term uh, in Fishers. The short-term, it is going to be cash flow is going to be very, very tight in the short term in Westfield. We're just seeing a lot of inventory hit the market. I mean, that's to me, this is the one takeaway number for this market report for Westfield is the number of active homes. And we'll see it on the next slide of what that means relatively. I mean, if you don't know 137, that doesn't mean anything, but I'll show you in the next slide what that means. But that is, to me, the takeaway is lots of inventory in the Westfield market, and it's affecting average rent. And you can see it. Look, we're down 4% year over year. We are down 3% roughly month over month, and average days on the market is 49, which is it's creeping up there for sure. That's actually down a little bit, but I would anticipate I wouldn't call it a race to the bottom, but if I had a vacancy in Westfield right now, I'm lowering my rent. I'm trying to get somebody in there ASAP because there's a lot of inventory on the market. There just is. There's a lot of new homes up there, which is great. There's a lot of activity up there, but there's also a lot of inventory up there. We've been talking about it a long time. maybe we're driving too many investors up there, but it's a reality that there's a lot of active homes on here. So if you're buying now in Fishers, you're definitely not buying for cash flow. You're buying for the 5 to 10 year appreciation play because there's a ton going on up there. Just listen to the economic data, but cash flow is no. If you bought your home 5 years ago, you're still loving it. So if you're looking to purchase, average sales price 367, 170, down year over year, up just slightly month over month, and 67 of those homes sold last month. If you don't mind going to the next slide, we can tease out the active homes, and you can see there in the red, that is just like since July or August, that is just straight up and to the right, and that is not what you want to see in terms of active homes / inventory / competition. So it's not awesome news there in terms of active homes. And then days on the market has been a little bit of a wild ride here this year. It actually is trending down, which is actually a little bit shocking to me based on the inventory. You would think that it would go up, and we may see it go up in over the next month or two, but actually not that bad, all things considered. There at the 49 days on the market.
Yeah, I agree. So a couple things I'd like to add here, as I know a lot of our investors here with Red Door have several properties here in the Westfield area, and I want to serve them at the same time that we're relaying this information. And also, if you're looking at the Westfield market, or if you have a property that's closing in the Westfield market, as I know a lot of people do. So this is what we're experiencing here on the ground. Active homes, you see it happening right here in this graphic. 137 currently active homes in the Westfield area, and you see that sloping up. And I guarantee, come December, we're going to see that slope up even further. And the reason I know this is because of our owners currently having properties marketed, and because I'm in tune with what's happening in the Westfield market. I know what the competition level is like, and it is high. There are a lot of townhomes that are completing construction, and those homes are just now hitting the market. A lot of investor activity. So, what you need to be, speaking to Mike's point just a moment ago, you really need to be making these adjustments. And also indicative of what we were just mentioning in the previous market report, of why it is so important to be in tune with the week by week data so that you can make informed decisions. But here it is. The competition is real in Westfield. You need to make the adjustment now. Stop the bleeding that's happening. Save yourself a few dollars. Put a butt in the seats, and hopefully you can put them in there for a 16 or 18-month lease and have turnover in the spring and summer going forward. But beside that, you're not, if you're going to list your property at what is considered current market value at $2,200 a month, I can tell you right now, your property is going to sit, because that is what every other investor in Westfield is listing their property for. They're listing it at $2,200. So they're all fighting. And I can't remember what we indicated last month, but we did a deep dive on this of what we were exactly seeing in the Westfield market for active competition. It's high. What you need to be marketing this property at is more like 2095, if not even 1995. I know that number sounds scary when you're averaging at 2200, but that's what's going to result in a quick application and a quick tenant being placed. So that's what you need to be looking at. And I feel like we're serving our owners a little bit with me relaying that information right here and now in this market report. And then the long-term play, there's a lot happening in Westfield. I would not be scared. I would not be rushing to sell my property. You're going to be just fine. But you're going to have some short-term pain for a long-term gain. I just wrote that right here and now.
Love it. Dang, it rhymed and everything.
I know. I can do things like that. You didn't know.
Hey, to that point though, I'm going to do a whole different video on this, but just for some real quick numbers. So 367 is your average sales price in in Westfield. If you see, it's called a 5% appreciation. That's relatively conservative. That is 361. I just messed up. 5% appreciation. That is, you're going to see $18,000 a year in appreciation. If you divide that by 12, that's $1,500 a month in appreciation. So if you have to take a haircut of $100 or $200 a month, you're still coming out ahead $1,300 a month. Now, that's not cash flow, of course. Yes, you're building that, in the home over time, and you're not seeing that come into your bank account. Right. But like you said, short-term pain for long-term gain. The long-term is a plus $1,300 a month.
Exactly. You're not getting this information anywhere else. So if you haven't liked and subscribed on this market report alone, you're wasting your own time. You're wasting your own money. This is it. That is beautiful information. Well done. All right, that's it. That's a wrap on Westfield. Everyone's going to love this. Let's move it along. You ready to move?
Let's do it.